This is Chris in Houston. I was actually noticing this myself, but any comments on changes in style factors in the 1 month flipping green on low debt to enterprise value, low short interest, low yield, and top 25% market cap? So it's sort of like, we've gone from Mike Taylor's junk trade, although I think some of that probably still has legs, to more of a kind of
that's a really good call out. And I was back and forth with a major hedge fund manager on this yesterday. Pop up these factor exposure table. Great observation. What's the subscriber's name?
Chris.
Chris. So Chris, what you just observed happens only one time. Where all the factor exposures that you would be underweight or short, which you should still be, by the way, because the other things worked fine yesterday as well. But what you see there on one day is that quality was working again. It was working big time on Friday. That's like low debt to enterprise value. What you wanted to be long is leverage or high short interest. This happens when the broad market just only goes up to new all-time highs. Everything goes up. Everything, including the things that weren't going up before. That's the point. It's called a meltdown. So it happens when you're really right on the quad, actually, and your trailing returns are really impressive because those things still work. The other things are playing a game of mean reversion, it's called, just chasing everything else. And the shorts get really panicked. That's why yesterday in the morning when the market opened up big, what did I do? First, it's actually directionally more important of what I'm doing than what the things I'm doing it in, okay? So I was covering shorts. I wasn't like sitting there like shorting things. Then on the close, I started reissuing shorts. So again, because you go through this whole day of grief where, again, I would challenge the entire profession to tell me who's got more timestamps on the short side since this guy publicly in 2008. It's not my first rodeo. So I prefer to not get my face ripped off when I think the market's going higher, my signal did intraday on the open. So you see me cover shorts on the open, then come back to them in the afternoon. Now, one of those was actually a mistake because it was plug power, which has been a great short, and it actually made a lower low after I covered it. But notwithstanding, it's the direction and the timing of what I'm doing in terms of like the decision, not the specific stocks. I know a lot of people out there, they're like so myopically focused on stocks because that's their baggage, right? That's not how I do it. I play the game, I coach the game. Same thing with coaches. You watch a bad coach, he's myopically focused on his own kid, what he's doing in the game. He doesn't see the game, he doesn't see the other kids, nothing. Right? If you watch me in a game, I mean, I'm just sitting there kind of saying not a heck of a lot. I actually had to learn that. I don't talk to the refs anymore, unless it's really blatant, then you'll definitely hear me. But again, you sit back and you watch the game. You definitely don't anchor and watch your own kid. That's ridiculous, right? So again, same thing with the market. Don't just sit there and watch your own little pet stock that sucks. You're gonna have a lot of them, right? You're gonna have a lot of shitty stock picks. If you just sit there all day and bang your head against the wall, I'm not making money in this. No. Find another way. Find another solution. Find another stock. Find a basket of stocks. Find different gross and net long exposures. Get yourself out of focusing on your own kid or that one stock. You'll do a lot better as both a player and a coach.